It's obviously going to be a tough quarter for Tata Steel because on one side it has the India operations which is struggling because of weak domestic demand, and then Europe as well, which has obviously not been doing very well for the last couple of quarters. In fact, it has been consistently underperforming the India operations for the last couple of quarters. So we are expecting the revenues to decline by 35% at 23,360 crores. The EBITDA are seen tanking to just 1,200 crores on a consolidated basis, and hence margins as well plummeting by 10 percentage points at just about 5.2%. And this time around, the company will post a loss of 2,200 crores is what the ET poll is suggesting. In India, do remember that while companies have been resorting to exports to sort of trim down on the excess inventories, exports realizations are not as lucrative as the ones commanded by domestic sales, and that's the reason why, of course, along with the fact that steel prices have been weak, at least in the April to June quarter, it is going to lead to weak realizations. In fact, we are expecting a fall in realizations by roughly about 19 to 20% on a year-on-year basis. So the India business will be hit by lower realizations, lower volumes, and that's the reason why the EBITDA per ton is seen tanking to 7,770 rupees per ton. But the Europe business will be faring a much worse fate because here there will be another quarter of an EBITDA loss that will be posted by the company at $30 per ton. That's the loss figure that we are expecting on the EBITDA level in the European business. Do remember that among the key factors that we are watching out for, especially in the European business, has got to do with whether they're able to get that bailout package from the European government. There were talks of course, even the government, British government, pardon me, there were talks of perhaps the British government even buying a stake in Tata Steel Europe, to sort of salvage the company for it to get out of this crisis. I would also want to watch out for a pickup in domestic demand. The sequential growth in production has been a little more slower in a Tata Steel compared to maybe a JSPL. Also, what's the momentum in steel prices? What sort of price hikes has Tata Steel as well taken? We've been reporting on ET now about how there have been price hikes taken by steel mills in the last couple of weeks, especially in the HRC segment. Tata Steel does have a big exposure over there. How is the new acquisitions, BSL and Usha Martin, which is of course now merged into its long steel products business? How are both of these businesses faring with this crisis that the company has sort of found itself in the midst of? That as well will be very interesting to watch out for. But yeah, largely, how is the company doing now that we are seeing a recovery of sorts kick in India? The future ahead will be what's going to be watched out for, especially because Q1 was a washout for many in India Inc., more so for a company like Tata Steel.